7 types of investments for beginners. Are you just starting to think about investing your money but not sure where to begin? With so many options available, it can be overwhelming to decide where to put your money. In this video, we'll be discussing the 7 most popular investment options for beginners, so you can learn more about each one and decide which may be right for you. Whether you're just starting to invest or are looking for new ways to diversify your portfolio, this video has something for you. Sit back, relax, and let's get started. 7 types of investments for beginners. 1. One investment option for beginners is a savings account. A savings account is a type of account offered by banks and other financial institutions that allows individuals to deposit money and earn interest on the balance. Savings accounts are considered to be low-risk investments, as the principal deposit is FDIC insured and the interest rate is typically low. They can provide a small return on investment, and can be a good option for individuals who are just starting to save and invest their money. Additionally, they are easily accessible, and you can withdraw your money whenever you need it. 2. Another investment option is mutual funds. Mutual funds are professionally managed investment portfolios that pool money from multiple investors to purchase a diversified range of securities such as stocks, bonds, and other assets. Each mutual fund has a specific investment objective, and they can be focused on different sectors such as technology, healthcare, or emerging markets. One of the benefits of mutual funds is that they provide diversification, which helps spread out risk. Because the fund holds a range of different securities, a loss in one area of the market is likely to be offset by gains in another. Additionally, mutual funds are managed by professional fund managers who have the expertise to make informed investment decisions, which can be beneficial for beginners who may not have much experience with investing. They also offer different level of risk in different funds, so it will be easier for beginners to find the one that suit their risk appetite. However, it's important to note that mutual funds also have management and other fees associated, so it's important to review the expense ratio of the fund and determine if the fees are worth the potential returns. 3. A third investment option is exchange-traded funds (ETFs). ETFs are similar to mutual funds in that they provide a diversified range of investments, but they are traded on stock exchanges, like stocks. This means that they can be bought and sold throughout the trading day, at prices that change based on supply and demand. One of the benefits of ETFs is that they are generally more flexible than mutual funds. For example, ETFs can be sold short, meaning that an investor can make money if the value of the ETF goes down. Additionally, ETFs often have lower management fees than mutual funds, which can make them a more cost-effective option. Another advantage of ETFs for beginners is that, as they can be bought and sold like stocks, it allows for greater control over when to buy and sell the fund, so it can suit better the individual's strategy and risk appetite. However, it's also important to note that ETFs, like stocks, carry some level of risk in the market fluctuations, and it's important for the beginner to understand the underlying securities and the sector that the ETF is invested in. As with any investment, it's important to do your due diligence and research the ETFs you're considering before making a purchase. 4. A fourth investment option is bonds. Bonds are debt securities issued by companies, municipalities, and governments with the purpose of raising capital. When an investor purchases a bond, they are essentially lending money to the issuer of the bond in exchange for regular interest payments and the return of the principal at maturity. Bonds are generally considered to be a low to moderate risk investment. They can provide a steady, fixed return on investment, which can be appealing for beginners who are risk-averse. Additionally, bonds can be used to diversify a portfolio, as they tend to perform differently than stocks during market fluctuations. There are several types of bonds, like government bonds, municipal bonds, corporate bonds, among others, each one with different credit rating, which determine the risk level, returns, and maturity date. Government and municipal bonds are considered to have less risk than corporate bonds, but usually lower returns. It's important to note that bond prices can fluctuate, and in a rising interest rate environment, the value of bonds may decrease. As with any investment, it's important for the beginner to research the bond issuer and credit rating, and to have a clear understanding of the bond's maturity date, coupon rate, and other characteristics before making a purchase. 5. A fifth investment option is real estate. Investing in real estate can provide a steady stream of income through rent, as well as the potential for appreciation in the value of the property over time. One popular way to invest in real estate is through the purchase of rental properties. As a landlord, you would collect rent from tenants and use that income to cover the costs of owning and maintaining the property, as well as potentially generate a profit. Real Estate Investment Trust, REITs, is another way to invest in real estate, where it is a company that owns and manages a portfolio of properties and distribute dividends to the shareholders. Real estate can also be a more hands-off way to invest in the industry, allowing beginners to benefit from the appreciation and cash flow of properties, without the day-to-day management and responsibility. However, it's important to note that real estate is not a liquid investment, and it can be costly to buy and maintain. It also carries a risk of vacancy and natural disasters. Additionally, the value of the property may decrease and it could be difficult to sell in a down market. As with any investment, it's important to do your due diligence and research the market and the specific property before making a purchase. It's also important to have a clear understanding of the potential costs and returns, as well as the risks involved. 6. A sixth investment option is stocks. Buying shares in a company can provide the potential for strong returns, but also carries more risk than some other options. When you purchase stock in a company, you become a shareholder, which means you own a small piece of that company and are entitled to a portion of its profits, in the form of dividends. Additionally, if the company performs well and its stock price increases, the value of your investment will also increase. There are several types of stocks, like growth stocks and value stocks. Growth stocks are those companies that are expected to grow faster than the market average, and they usually don't pay dividends, but the stock value is expected to increase. Value stocks, on the other hand, are companies that are trading at a lower price compared to their underlying fundamentals, and they tend to pay dividends. Investing in stocks can be done directly by purchasing shares in a company through a brokerage account, or by investing in a stock mutual fund or ETF. However, it's important to note that the stock market can be highly volatile and the value of stocks can fluctuate greatly in a short period of time. Additionally, the performance of a single stock can be affected by factors specific to the company, such as financial performance, management decisions, and competition. As with any investment, it's important to do your due diligence and research the company and the stock market before making a purchase. It's also important to be aware that the past performance of a company or the market is not a guarantee of future results. 7. A seventh investment option is cryptocurrency. Cryptocurrency is a digital or virtual currency that uses cryptography for security and operates independently of a central bank. Bitcoin is the first and most widely used cryptocurrency, but there are many other types in existence. Investing in cryptocurrency can be highly volatile and carries a high level of risk. The value of a cryptocurrency can fluctuate greatly in a short period of time, and in some cases, can experience significant losses. However, it can also provide the potential for high returns, particularly during periods of market growth. There are several ways to invest in cryptocurrency. One of the most popular is buying it through a cryptocurrency exchange, where you can use fiat currency, like US dollars, or other cryptocurrency to purchase digital currency. Another way to invest in cryptocurrency is through mining, where individuals can earn new coins by using powerful computers to solve complex mathematical problems, called mining. It's important to note that cryptocurrency is a relatively new and highly speculative investment. The regulations and stability of the market are still developing, and it may be subject to less oversight or protection than other investments. Additionally, investing in cryptocurrency may require a high degree of technical knowledge, and it's important to do your own research and consult a financial advisor before making any investment decisions. So, there are many different types of investments that can be suitable for beginners. From low-risk options like savings accounts, to more risky options like stocks and cryptocurrency, there are a variety of options to choose from. It's important to consider your investment goals, risk tolerance, and time horizon when making a decision. We hope that it's provided valuable information and has helped you to understand the different investment options available. Don't forget to subscribe for more information on investing and personal finance.